Welcome, traders, to another Tickmill trading update with me, Patrick Munnelly. Want to update the SP500 view heading into the new trading week and identify some potential action areas and high probability price objectives for the week ahead. So before we jump into the charts, as always, want to take a look under the hood and see where we are in terms of market dynamic, market narrative, and some of the internal indicators. So let's just pull up the trade update from this morning. So in terms of performance from last week, we traded up just over 1.5%, closing at that pivotal 6,000 level. The S&P now is just 2.4% from its all-time highs, and the setup at the moment still remains constructive. The S&P also broke and closed above the May high, which is an important note. In terms of the market condition on the daily time frame, we're one time framing up, and so 59.84 is a key level there in terms of that would neutralize that trend. Weekly one time framing up now at 58.70, so quite a pullback required there to neutralize that trend. And on the monthly, we are also one time framing up, and the levels to be confirmed at the close of the month. In terms of the gap levels to watch, the closest really on the downside is 58.43 and 57.41 below there. In terms of the market breadth, in terms of the short term on a 20-day look back, again, we've raised there up from 57% last week to just over 60% this week. The intermediates on the 50-day look back increased to 72.6 from 70.3 last week. And the long term, the 200-day look back has moved up 1% from 48.3 to 49.2%. Still caution in terms of the long term read. I want to see that get above 50 to really solidify an uptrend here. In terms of the calendar for the week ahead, consumer CPI on Tuesday. We have consumer inflation on Tuesday. Wednesday is the CPI print. Thursday is the PPI. And we round out the week on Friday with Michigan consumer sentiments prelim number there. So pretty light on the data side of things. What I would note, though, in terms of the macro, is that we have a 10-year auction on Wednesday and a 30-year on Thursday. And the 30-year last time was relatively poorly received. Obviously, there are concerns in the bond market about foreign sellers in terms of US debt. So I want to keep an eye on those auctions, as they could impact price action and certainly be a cause of volatility. In terms of the market narrative for today and heading into the week, I guess it's really about tariffs at this stage again, with the US and China delegations meeting in London today. And so we'll see what comes from that. I think the bar's been set relatively low, so I'm anticipating the mood music to be fairly supportive there. We're looking for headlines potentially coming out of that meeting later today into this evening. In terms of volatility has come in. We are well below the 20 level now. So with the near term or the print from today, 17.48 is the print at the moment. I'd be watching the 18.5 level. As long as we're below there, I think it's difficult to see a liquidation event. But keep an eye. Any assault on the 18.50 and a move above there, we could see a pause to the current uptrend that we're in. So just those are some VIX levels to keep an eye on. In terms of the VIX curve, really pretty stable, or we don't really see any issues until really heading into probably September, October, with the term structure looking above 21 at that stage. But like I say, at the moment, relatively flat term structure. So should be reasonably safe as long as we hold that 1850 level as we go into this week. In terms of the gamma, we do have options expiration, triple witching next Friday. So that's going to start to come into focus. Currently, the gamma structure is positive. There is still some interest at the 6,000 strike in terms of SPX, but really we see that rolling up now into the 6,100 level. And if the market is continuing to maintain its bullish posture, we want to see a build towards the 6,200 level to continue to keep things orientated to the upside. In terms of expected flows at the moment, we can see some buying here. Flows may not be as strong. Volatility control funds, majority of them will be buyers, but since their positioning will be controlled by the trailing quarter realized volatility, there isn't much for them to do. Commodity trading advisors, CTAs, probably still small buyers, but could increase buying. If we can hold above this 6,000 level, that would draw more trend followers into the action. And the big question really is will retail continue to buy the dip? At this stage, that trend, it remains intact. And in terms of Goldman Sachs and their client activity here and the update I posted this morning, downside hedges really in financial and semiconductors. SPX put spreads extended into July, reflecting concerns about a potential tariff pause. Must remember that we are getting close to that 90-day deadline. But at this stage, like I say, the mood music remains a little bit more constructive than certainly the beginning of last week. So as long as that remains the dominant narrative, then we can see a continued grind to the upside. Trends are from the monthly really down to the hourly are bullish at this stage. So nothing really to be too concerned about unless we start to trade below some key levels. So let's update the levels now. And the weekly bull bear zone I'm using this week is 59.40 to 59.50. Any pullbacks to there, I will certainly be interested to add exposure on the long side. You can see my positions here and my stocks risk exposure at the current market levels. So with the weekly bull bear zone of 59.40 to 59.50, we have the weekly VWAP, which is bullish. 58.78 is where that comes in on the downside. So expect we would need to see a close below there on a weekly time frame to flip the weekly volume weighted average price bullish. Note we are trading above that 78.6% retracement. We're also trading above the volume point of control for the look back here at which comes in at 59.70. So again, all constructive at this stage on the weekly time frame. We are getting a little bit extended on the stochastic, but nothing immediate to worry about. Note that the momentum indicator has just flipped bullish now as well. So constructive on the weekly time frame with a weekly upside objective now on a break of the prior all-time highs through 61.60s, which gives us 65.26 as the 127 extension. Also coincides with yearly R1, which is 64.86. So that's the primary upside objective as this uptrend remains intact. Moving to the daily time frame. On the daily, we have 59.71, which is the 5-period volume weighted average price to look back. So as long as we trade above there, the trend or momentum, remains to the upside. And we are looking now in terms of range expectations for the week, a slight reduction. We were looking for about 115 points either to the upside or the downside last week. This week we are looking at about 90 points. So 60.98, 6100 we anticipate to be a resistance in terms of implied volatility, and support back down into 59.14. So keep those levels in mind in terms of realistic price targets if you're looking at swing trade positions. Let's jump into the intraday time frame, and I'll give you some idea of what I'm looking at in terms of setups. We've taken out the resistance at the bull flag this morning. We're consolidating here, like I say, above that 6,000 level, which is constructive. As we hold there, I'd be looking for any retests of last week's highs into that 60.26 area, 60.35 key as well. Pullbacks then, we are looking for those to find support into our volume weighted average price and our midpoint. So anything, and our volume point of control overnight. So 59.90, 6,000 level. Watch for bullish reversal patterns there. And we're going to be targeting that initially the weekly range resistance into our 60.98 area is going to be the key target on the upside. Initially, watch 60.50. We're likely to see a bit of a pause there. That's why I've drawn these in. This was from the update this morning. This is just the intraday hourly time frame. But what I've been watching for is any pause that we get into that 60.50 area. These prior highs then at the 60.20s to act as support for the extension then up into our weekly range resistance. 60.98, 60.100 is going to be the primary upside objective for the week. The alternative scenario now would be that we stall out into these prior highs and get a pullback into the weekly bull bear zone into that 59.40, 59.50. Again, like I said, I would be watching for bullish reversal patterns there to engage on the long side, and we're going to have the same upside objective at into that 60, 98, 6100 level on the upside. So those are the two initial theses I'm watching in terms of bullish setup. On the downside, we'd want to see a close through the bull bear zone. So taking out the 59.40 on a closing basis, and daily projected range support is at 59.50 at the moment. So we'd be looking at any breach through there, which would open up a retest of last week's lows down through 59.28. If we take out the 59.28 to the downside, then we're going to be looking at a test of weekly projected range support, 59.14. Again, we have the volume point of control on this hourly time frame, 59.15. So any move back into that area, certainly watching for bullish reversal patterns there to play from the long side to get a retest then of the bull bear zone from below. We'll then see if sellers step in to take things lower. But at this stage, like I say, the setup is constructive, and we're looking for a test of weekly projected range resistance as the primary target this week. And updates are provided daily through the Tickmill blog. You can check in on those through the Tickmill site there to get my daily updates and trading setups and trade levels and targets for the trading day ahead. Equally, you can join the Tickmill Trader chat. If you want to drop me an email, patrick.munnelly@tickmillpartners.com. I can send you an invite for that. I provide daily updates there, institutional insights throughout the day, and trade setups, etc., that I am actively monitoring in the markets. And you get a daily update of my P&L. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.